Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of the stock market so you don't have to. And today we are going to really decode this Lumen Technologies filing. Get ready for a deep dive into their financials from December 2025, and trust me, there are some big shifts happening here. If you love getting the real story behind the numbers and want to know where this company is headed, stick around. And hey, before we dive in, if you appreciate straight talk about corporate filings, make sure you are subscribed and hit that notification bell. We also have a fantastic community over on Discord for more in-depth discussions, so check out the link in the description below. Now, let's get into it. So what are we looking at today? Well, this is Lumen Technologies filing their annual report, or 10K, for the year ending the 31st of December 2025. Think of this as the company's yearly checkup, showing us how they performed financially and what challenges and opportunities lie ahead. Before we jump into the numbers, there is always a section about forward-looking statements, and honestly, it is a bit of a mouthful. But what it means is that the company is giving us their best guess and projections for the future. Things like anticipated future results of operations and their plans for transactions, including the ongoing sale of their mass markets fiber to the home business. They're basically saying, look, we're making these predictions based on what we know now, but things could change. Now, let's talk about what Lumen actually does. They're a digital networking services company. They connect people, data, and applications for businesses all over the world. They have a massive network of fiber optic cable, over 340,000 route miles globally as of the 31st of December 2025. They organize their business into two main segments, the business segment serving companies large and small, and the mass market segment serving regular households. They also mention a big sale happening. On May 21, 2025, they agreed to sell their mass markets fiber to the home business in 11 states to AT&T, and this deal actually closed on the 2nd of February 2026 for a hefty $5.75 billion. Alright, let's get to the money. The first big financial table shows us their operating revenue. For the year ending the 31st of December 2025, total operating revenue was $12.4 billion. This is down from $13.1 billion in 2024, which itself was down from $14.5 billion in 2023. That is a pretty consistent downward trend in total revenue year over year. The business segment saw a 5% drop in revenue to $9.89 billion in 2025 compared to 2024. The mass market segment also dropped by 9% to $2.5 billion. Diving into the business segment revenue breakdown, we see the grow category, which includes things like dark fiber and IP services, actually increased by 5% in 2025 to $4.59 billion. That is good news as they invest in these areas. However, the nurture category, which includes more mature offerings like VPN and Ethernet services, saw a significant 15% drop to $2.5 billion. The harvest category, which are their legacy services and are managed for cash flow, also dropped by 9% to $2.06 billion. This shows a clear shift where their newer growing services are picking up some slack, but the overall revenue continues to decline as the older services shrink. In the mass market segment, fiber broadband revenue actually jumped 20% in 2025 to $883 million. I guess the fiber build out was paying off there before the big sale, but this was offset by a massive 19% drop in other broadband, which is their copper-based service, down to $950 million, and a 20% drop in voice and other to $674 million. The company even had to give back $46 million in FCC funding for rural broadband programs after they voluntarily gave up their RDOF awards. So overall revenue is down. This is a consistent trend. While they are growing in some key areas like fiber and IP services, their legacy business continues to shrink faster. This means they are focused on higher quality revenue streams, but the sheer volume of their older services is still a major part of the picture, and that part is shrinking. Now let's look at expenses. Total operating expenses rose to $13.2 billion in 2025, up 4% from $12.6 billion in 2024. A big reason for this jump is a $628 million goodwill impairment charge in 2025. This means they had to admit that a part of their business, specifically the mass markets reporting unit, was not worth as much as they thought. Selling, general and administrative expenses also increased by 8% to $3.19 billion. Depreciation and amortization expense went down by 7% to $2.74 billion. This is partly because they stopped depreciating the assets for the mass markets fiber to the home business once it was classified as held for sale. That goodwill impairment we talked about, it was $628 million in 2025. Remember that goodwill is basically an accounting value for the extra money paid for acquisitions. When they have to write down goodwill, it signals that those acquisitions or parts of the business are not performing as expected. In 2023, they took a massive $10.7 billion goodwill impairment charge. So while the $628 million in 2025 is still a big number, It is a step in the right direction compared to that devastating 2023 charge. Interest expense decreased by 6% to $1.28 billion. This is good news as they pay down some debt. However, they also had a huge $740 million net loss on early retirement of debt in 2025 compared to a $348 million gain in 2024. This means they were actively refinancing and paying off debt, which often comes with costs. Now for taxes, they recorded an income tax benefit of $977 million in 2025. This seems like a lot, but it is largely due to some favorable tax adjustments, like statute of limitations releases on uncertain tax positions. Without these adjustments, their effective tax rate would have been different. This filing is packed with risks. Let's talk about some of the most important ones. Companies have to disclose what could go wrong, and Lumen lists quite a few. They admit that integrating and modernizing their legacy systems is a huge undertaking. If they don't get this right, it could mess with service delivery and their financial goals. They are also highly dependent on technology and suppliers. They are investing heavily in AI-related services, but they admit their plans might not pan out. If the demand for AI services isn't as strong as they expect, they could have misallocated resources. Competition is fierce. They're up against everyone from giant tech companies to smaller niche players. This tough competition squeezes prices and affects their profits. Innovation is key. If they can't keep up with the rapid technological changes and offer what customers want, like faster speeds and AI services, they could lose business. Attracting and keeping good employees is a challenge, particularly with their stock price not doing so well recently, which impacts their equity compensation. Plus, their remote and hybrid workforce could affect collaboration. This is a big one. They've seen steady declines in legacy services like voice and private line. This has spread to broader offerings and is putting pressure on their profitability. This financial uncertainty could also make customers, vendors, and employees nervous. As a critical infrastructure provider, they are a constant target for cyber attacks. These attacks could disrupt operations, compromise data, damage their reputation, and cost them a lot of money given the global nature of their business and the increasing sophistication of threats. This is a major concern. They have agreements and bylaws in place that could make it difficult for someone to buy them out, which might not be great for shareholders looking for a takeover premium. The regulatory landscape is always changing, and Lumen operates in a heavily regulated industry. They face rules from the FCC, state commissions, and international bodies. They mentioned voluntarily relinquishing FCC Rural Digital Opportunity Fund awards, and acknowledged this change will impact future revenue. They are involved in several lawsuits, including ones related to shareholders and environmental issues stemming from lead sheaf tables. These legal battles could be costly and impact their finances and reputation. And then there are clear financial risks. They have a lot of debt, around $17.8 billion as of the 31st of December 2025. This high debt load means a large portion of their cash goes to paying interest and principal, leaving less for other important things. It also makes them more vulnerable to economic downturns. With their credit ratings and market conditions, getting new financing or refinancing existing debt could be tough and expensive. Their debt agreements have strict rules or covenants that limit what they can do, like borrowing more money, paying dividends, or selling assets. If they break these rules, they could face serious consequences, like having to pay back all their debt at once. Let's look at their financial discussion. Lumen is really focusing on enterprise growth and digital transformation. They see a big demand for high-capacity, low-latency connectivity solutions driven by AI and cloud computing. They're actively managing revenue mix, shifting from legacy services to newer ones that generate lower margins but are seen as key to future growth. Inflation and supply chain issues are also impacting their costs and network build-outs. Looking at the numbers for the year ending the 31st of December 2025, total operating revenue was $12.4 billion, a decrease of 5% from 2024. Cost of services and products decreased slightly by 1%, to $6.63 billion. But selling general and administrative expenses actually went up by 8% to about $3.2 billion. This increase is partly due to higher hardware and software expenses and fees related to giving up that FCC broadband funding. Now, adjusted EBITDA, which is a measure of their operational profitability before certain expenses. In the business segment, adjusted EBITDA was $4.52 billion in 2025, a slight decrease of 2% from 2024. This kept their segment adjusted EBITDA as a percentage of revenue at a solid 46%. For the mass market segment, adjusted EBITDA decreased by 7% to $1.39 billion. Interestingly though, their adjusted EBITDA as a percentage of revenue actually improved slightly to 56% in 2025, thanks to cost cutting like lower headcount and marketing expenses. How is their cash situation? As of the 31st of December 2025, they had $1 billion in cash and cash equivalents, and $722 million in available credit. They also have a lot of debt, $17.8 billion. Net cash provided by operating activities was $4.7 billion in 2025. This was an increase of $405 million from 2024. This improvement seems driven by better working capital management and advance payments from their fiber to the home solutions. Investing activities used $4.3 billion in 2025. This is a big jump from $2.8 billion in 2024. The main reason for this increase is higher capital expenditures, specifically $1.1 billion more invested in network modernization and fiber expansion. Financing activities used $1.3 billion in 2025, a decrease from $1.85 billion in 2024. This is partly because they took on more debt in 2025, but also paid down a significant amount. They are clearly very active in managing their debt. In 2025, they issued billions in new notes and used those proceeds and other cash to pay off older, more expensive debt. They've been refinancing aggressively to lower their interest costs and extend their debt maturities. For example, they refinanced several second lien notes and first lien notes throughout 2025. Lumen also has significant pension and post-retirement benefit obligations. As of the 31st of December 2025, the combined pension plan had assets valued at $4.18 billion. Their level 3 investment category within this plan alone is worth $2.17 billion. These plans are complex and heavily influenced by market performance and interest rates. Let's talk taxes. Their income tax situation is a bit complicated. In 2025, they had a loss before income taxes of $2.7 billion. They recorded an income tax benefit of $977 million. A big chunk of this benefit came from releasing uncertain tax positions, and also from favorable tax laws. They also have substantial net operating loss carryforwards, which can reduce future tax bills but are subject to limitations. The company reconciles its segment adjusted EBITDA to net loss. For 2025, total segment adjusted EBITDA was $5.9 billion. They have the business segment bringing in $4.52 billion in adjusted EBITDA, and the mass market segment contributing $1.39 billion. Looking at the balance sheet, it is clear they have a significant issue with stockholders' deficit. As of the 31st of December 2025, total stockholders' deficit was $1.117 billion. This means their liabilities outweigh their assets on paper. And finally, the bottom line. For the year ended the 31st of December 2025, Lumen Technologies reported a net loss of $1.739 billion. This is a significant increase from a net loss of just $55 million in 2024. That loss in 2023 was an astounding $10.298 billion. So what is my take on all of this? Lumen is in a period of intense transformation. They are shedding legacy businesses and investing heavily in newer growth areas like fiber and AI services. The sale of their mass markets fiber to the home business for nearly $6 billion is a major step in simplifying their operations and strengthening their financial position. However, the consistent decline in overall revenue is concerning, and the significant debt levels are a persistent risk. The massive goodwill impairment in 2023 and the ongoing legal and regulatory challenges also highlight the inherent risks in their industry and business model. While their focus on growing segments like the business segment and specific grow categories shows promise, the company is still navigating a very challenging environment. The increasing selling general and administrative expenses alongside the revenue decline also suggest that cost control will be critical moving forward. The company is clearly trying to pivot towards more profitable and future-proof services, but it is a difficult transition. Alright, that is our deep dive into Lumen Technologies' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more of these corporate breakdowns. And again, don't forget to check out the Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.